Today I'll be showing you how to sell covered calls, and this is a great way to make money weekly if you already have some capital to start with. And so let's come over here. For this example, I'm going to show you on Blink charging with ticker symbol BLNK. And so what we're going to do is we're going to come down here and we're going to click the week closest to us. I'm recording this on August 7th, so we're going to click August 13th, and you're going to sell a call. So right now the share price is at $34.05. So let's come up here and let's click, let's say $37. And so you're going to get credit for selling this call, and you'll get $54 if this expires on August 3rd. Or actually, you get the credit right away, but there's two different things that can happen on August 13th on expiration. And so one of the things that can happen is if the share price is under this $37 right here, then you keep the credit, and you also keep the 100 shares of Blink that you have to have. So to do this, you're going to have to own 100 shares of Blink, which is going to be about $3,400. But once you have that capital, you can put it in and you'll make passive income every single week, about $54 every single week. And you keep your 100 shares of Blink, so if Blink goes up as well, then you're going to be making money that way as well. And so what happens if the share price expires under $37 on August 13th, then you'll keep the 100 shares of Blink that you already own, and you'll keep the credit, the $54 that they gave you to start this option. So what happens if it expires above $37? So right now the share price is at $34. So let's say I bought 100 shares right now at $34. So that'll be $3,400. And then let's say that on August 13th, Blink is $37.50, which is above this call that we sold right here. So we're going to make that gap. So it goes from $34 to $37.50. Let's say it goes from $34 to $38. Let's say Blink expires at $38 on August 13th. So it goes from $34 to $38. So that's $4 a share. We'll be forced to sell our 100 shares of Blink at $37 because this is the call that we sold. So we'll make, you see that gap right there, it goes from 34 to 37, and we're selling 100 shares, so 100 times that $3 gap, we'll make $300 there, and then we'll also keep the credit of $54. So we'll make $300 plus that 54, so we'll make $354, and that is if Blink's share price is above the call that we sold. And so even if Blink went up to, let's say, $40, then you still only make this gap from 34 to 37. Let's say I sold my call up here and Blink expires at $41. Then you make this gap, the share price, from $34 to $38. That's a $4 gap, and that's the 100 shares. So 4 times 100, that's $400 gap right there, plus this total credit of $36. So that's how selling covered calls works. You do have to own 100 shares of the stock, which that can get pretty expensive considering Blink is at $34 right now, so that'd be $3,400. So it can get pretty pricey, but once you can get that, then you have passive income weekly, and it's pretty easy to do, and you make income from the stock going up and down as well. So thanks for watching, and if you have any questions, comment down below and I'll be sure to answer all of them.